Welcome back. You're watching India Sense with me, Gauri Dwivedi. We've got a power-packed lineup of guests, market experts, economists to really decode what all India should be focused on to really get on to that growth highway, and also specifics, whether it is the Indian rupee, whether it's crude, whether it's our larger macro picture, what all we need to really focus on to ensure that our target of being a 7 trillion, 10 trillion economy actually gets fulfilled ahead of schedule, if not on time. All right, before I get in our guests this evening, Peter Cardillo, Manish Maheshwari, Willem, Buiter, as well as Abhinav, Mishra, I want to quickly tell our viewers the big questions that we are going to pose to them. The key questions that matter when you talk about the budget. First up, what are the headwinds when it comes to India's growth? The specific areas that we need to watch out for, whether it's the trade factor, whether it's internal issues, whether it's related to FTI, what are those? We're going to decode that. The second key question that we're going to put forth to our panelists is, India to get on the 10% growth highway, what does it need? Because that's the kind of growth we need to really get on to being the Viksit Bharat dream that the Prime Minister has spoken about and we all aim to be, which is a developed economy on our 100th anniversary of independence. The next key question, let's put that out for our viewers, which is how will India navigate the Trump tariff threat? Remember, that's the key issue that's being talked about again, not because it's just about a US-India issue, but because it sets the tone for how India will be navigating protectionist tendencies. The other key question, the last one that we're going to put out, is external factors. How much will they affect growth? Whether, as I said, it's going to be crude, whether it could be factors related to uncertainty around tensions, wars, all that. How much will that impact our growth is the question we're going to get. Okay, let's get in Peter Cardillo, who's the chief market economist of Spartan Capital, joining me from New York in just a bit. Manish Maheshwari, who used to be at Twitter, but now he's a Mason Fellow at Harvard University. Mr. Willem, who's a former professor of economics and chief economist at Citi and EBRD. And I have Abhinav Mishra joining me from Singapore, another expert of markets, someone who understands what will it take for the Indian economy to get onto that highway. Gentlemen, thanks so much for speaking to me on India Sense. And in fact, Mr. Willem, let me start with you, sir, which is that in terms of your key priorities, the budget has highlighted some, there have been some headwinds also that have been pointed out. According to you, what should be the key priorities for the government to really focus on when it comes to ensuring that Indian growth continues to be on the kind of target that they hope for?
Well, the budget is important here, but more important than the budget is continued deregulation of the Indian economy. That's a major obstacle, over-regulation still, despite the significant improvements in the last 4 years that holds back growth. The budget itself should aim at sustainability. The public sector, general government, debt to GDP ratio at 85% is too high. And so the government has to selectively focus on capital expenditure, especially infrastructure, and on imposing taxes in a way that does least to discourage entrepreneurship and activity. Broad-based taxes are best for this.
Okay. I'm glad you mentioned about deregulation, because that's one of the first and key themes of the economic survey today. India's chief economic advisor made a very strong pitch for deregulation. In fact, he said, get out of the way. That's essentially what the mantra should be. The state's role should be limited when it comes to aiding growth rather than playing a larger role that could be in the way of Indian businesses. This is what the CEA has said, and let's hope how much of that translates into government action, because it's not just about the budget, but there's also, of course, a larger government framework that has to sort of aid that. Mr. Mishra, you're joining us from Singapore. You're someone, we've spoken before as well about Indian equities, Indian markets, Indian investors. What are investors really looking out for? Because one may say that the FDI numbers have fallen in the last couple of quarters, but the other side to it is India is still the world's fastest growing economy. If you aren't here, where are you really going to go? Unmute yourself, sir.
Thank you. Can you hear me now?
Yes, yes.
Yes, thank you for the meet. So, and you are right. So India continues to be the fastest growing economy, but that goes without saying that the current budget session comes to the backdrop of slowing growth, but as well as, more importantly, slowing domestic demand, which contributes about close to 50% of the Indian GDP. And that has been largely the challenge in the recent times. Lack of also depreciating rupee, global uncertainty, is only combining the tension. If you look into this budget, while government hands are tied due to the slowdown in overall revenue, and the government revenue has been kind of slowing, but they have maintained their target on the fiscal deficit, and I think the finance minister in July's speech mentioned about 4.5% target for March next year, and 4.9% this year itself, and that has been, and maintaining that means that the government spending has been reducing over the course of last couple of quarters compared to what they had anticipated. And even the current targets are being met largely due to a lot of stimulus with the high dividends that RBI kind of contributed to the economy. Now, while we are looking at the budget that is coming out tomorrow, very soon we are also going to hear from RBI on the monetary policy guidance next week.
Yes.
Which is also interesting, given the monetary policy challenges also continue. So the rupee has been at the record low against the US dollar. And if you look at while the inflation has been quite in control within the thresholds of RBI, they will struggle to reduce the interest rate significantly, in order to manage.
That's an important point you're making, just for the benefit of our viewers, because, to keep it simple, the fact is what will come out tomorrow is how government plans to raise money and spend money. And what Mr. Mishra is also talking about right now is that what will the RBI do when it comes to interest rates, given the fact that inflation still remains a concern. Economic survey also points about it, that inflation will remain a concern. And monetary policy can be a discussion, but I want to come back to the budget, given that we're speaking on the eve of it. Mr. Peter Cardillo, can you hear me now, sir?
Yes, I can hear you.
Great. I was going to ask you in terms of your one key expectation from the Indian budget tomorrow. What would that be? Would it be infrastructure? Would it be skills? Would it be on better taxation? What would that be?
It would be infrastructure and education at all levels. Those are the two key drivers of growth that the central government has significant impact on. I would hope that we would see significant reallocation of resources from other unproductive activities to infrastructure and education at all levels, and getting the female labor force educated at the same level as the male labor force would be another important step.
All right, before I slip into a short break, let me get in a quick word from Manish Maheshwari as well. Manish, last year, the budget laid a lot of emphasis on skills, something that we expect to continue this year as well, along with usage of technology, because that's really going to be the gateway to future growth and unlocking future growth potential for India. Do you share my optimism?
Oh, first of all, thank you for having me on the show. My personal view is that, yes, investment in skill doesn't go waste. I think the question would be, are you investing in the right skills? And what we have seen in the last 1 to 2 years is that clearly many of the skills that were seen as important may not be as important. For example, the coding skills or the basic copywriting skills, those could be done by AI. I think what would be more important would be skills that are not replaceable. I think skills that require a bit more human creativity, that require human interaction, and also, advancement in AI has also opened new sectors that could require a lot of skills. For example, agriculture can be done better now with precision farming. Healthcare can be improved as well with better diagnostic and telemedicine. The same happens to education, that the new ways to deliver education as well. So the question then becomes, are we looking at the right skill set as the whole global landscape in terms of the future of work is also going to change big time in the coming few years? So that would be very important for people to look at and also invest in the right areas.
That's an important point you made. Of course, you've got to invest in technology of the future because that's the only way you're going to be part of the tech growth story. I'm going to slip into a very short break, come back on the other side, talk more about the 10% growth highway that we at India Ascends have been talking about for a while now. How do we get there? And most importantly, the key parameters to watch out for tomorrow as well. Stay with us in this special broadcast. Welcome back. You're watching a special budget edition of India Ascends. And the question I want to now put forth to our panelists is, how much will AI be a catalyst when it comes to India's growth? And I think the person who can answer this best is Manish Maheshwari. Go ahead, Manish, talk to us about the importance of AI and how much of a catalyst it could be for us.
So it would be a major catalyst, right? I mean, not just in India, I would say globally. So I'll tell you a couple of areas, in fact, two big areas where it would create an impact. One would be it resets the playing field for everyone. I mean, all the work, all the skills we thought was valuable may not remain as valuable now, given that many of the things would be done by AI and also more importantly now agentic AI, which would sort of also be able to do your work in the way agents used to do. Now, the question then becomes, where do you then focus on? I think clearly we will have to then think about as we have to move up from the monotonous or the repetitive work, we can think about now like more creative work or things that were not possible before. We will have the time and the capacity to focus on those things. So that's one area. Also, it also means that many vertical specific applications will come up which will use the foundational models, and that will then change the game in respective areas. Like I can think about, like, say, education delivery can be very different, like how skills are taught, how you do education can be enhanced through AI. The same can happen with healthcare.
Yes.
There can be better diagnostic. You can think about other things. So that will completely change the way we think about work, we think about future. And for a country like India, it also allows us to now rethink many of the programs and policies, because our programs and policies were framed in, say, pre-2022 era, where we were not aware of the developments in AI.
Yes.
There's also a debate about what should the government role be. I think my view there is that government should create an enabling environment in the sense that they should encourage work in this area. But
yes,
they should also reduce the regulations around it, right? I mean, and I think, and also ensure a thriving entrepreneurial ecosystem, because many of the work will come out that entrepreneurial community. And as we saw with DeepSeek in China, it didn't come out of the state effort; it came out from a private hedge fund. So my view is that if you let the innovation happen and create the right enabling environment, you attract the right talent, and then the magic will start happening over time, right? I mean, so that's one.
Okay.
India also has a very interesting role as one of the leader in Global South to sort of lead many of these changes. So I'm surely hoping that this would be another moment where we will leapfrog to the next level of delivery and
That's
performance.
An important point you made.
At an individual
important
level,
point you made in terms of the leadership on a Global South level as well for India. Let me now turn attention to the other aspect of the budget and the budget making exercise. We spoke at length about the opportunities that lie, but there are also certain specific areas, particularly like crude, like energy as a basket as a whole. We import over 80%, almost 85% of our needs, and global price changes impact us. Abhinav, Mishra, how do you read that, given the uncertainties that remain, the fact that there are sanctions on Russian oil, Donald Trump's his view on crude is unpredictable at best. How do we protect our interests first and foremost?
I think you're right. So India still kind of imports above 80% of its crude oil requirements, also about 6% of its natural gas requirements. And that is only going to continue. So with the needs and the growth of Indian economy, I think on an 5 to 6% growth is what we are seeing. we're looking at about 5 million barrels per day requirement by 2030. At the same time, India continues to be a strategic partner for US, and that is not changing. If anything, what President Trump has said since his comeback as US president is to drill more oil. And if anything, what's good for India is while the currency has seen some depreciation against the strong dollar, the crude oil prices have remained largely stable. Now, there might be some pressures with regard to its oil imports from economies like Russia, but then India can always diversify its oil imports including from US markets and focusing a lot more on these. Obviously, it has to come at the competitive pricing. I believe India has managed overall its relationships with global counterparts quite well and continue to do so going forward as well.
All right, Willem, let me then bring you in on the one thing which is almost like a collective national aspiration, which is our semiconductor aspiration. A lot of investment has been made in the last couple of quarters. Government's intent is very clear. There's been global interest as well. How do you see that playing along in the backdrop of a US-China chip war? Because that could be the kind of tailwind that could really propel our chip ambitions.
No, it's clearly true that the competition and rivalry between the US and China will end up benefiting India as a destination of foreign direct investment of the kind of high-tech industries that used to invest in China. And I don't think that there's much risk of India being declared a country that high-tech cannot be exported to by the US. So I think India is well set up to grow its share in the IT and the AI sector. For AI, it's very important that even if you don't contribute to the development of the next stage of AI, the use of AI as existing AI as an input in industrial production across the board will be massive. So I think India is well set up. I think provided the government deregulates the entry and expansion, diversification of businesses and firms, India is well set up to become an IT leader in the years to come.
Okay. All right. I'm afraid that's all the time we have in this edition. And thank you so much, Manish, Willem, Peter Cardillo, and Abhinav Mishra for speaking to me ahead of what could be a game-changing budget, because many see this could really be like the 1991 budget. We need to now change our gear. We need to get onto that high growth trajectory. The answer to that, of course, lies in that red bike khata of Finance Minister Nirmala Sitharaman. Thank you so much for watching this special edition of India Sense.